Hello friends, my name is Mayanka. I am accounts and finance trainer from Uplatz. Today we are covering the topic of IND AS 101, first time adoption of Indian accounting standard. In this video we will cover all the concepts which are related to the first time adoption of Indian accounting standards. Objective. What is the objectives of IND AS 101? The objective of IND AS 101 is to ensure that an entity's first IND AS financial statements and its interim financial report for the part of period which is covered by those financial statements contains the high quality information that the main objective of the IND AS 101 is to ensure that when there is any organization which is preparing its financial statement on the basis of IND AS, when there is any organization adopt IND AS, first time adopt the IND AS and prepare its IND AS financial statement and the interim financial report for the part of that financial statements, then such IND AS confirm that whether the financial statement of such organization contain the high quality information, that information is transparent for the users and comparable over all period presented, is that these informations which are very much important for the user of financial statement, and on the basis of these informations the user can compare the data and compare the financial position and the financial performance of any organization over the period or with the other entities, and provides a suitable static point for accounting in the accordance with IND AS. This contain high quality information that can be generated at a cost that does not exceed the benefits, is that the IND AS 101 is to be ensured that when there is any entity which adopt IND AS first time, then its first IND AS financial statement and its interim financial report for the part of the period which is covered by financial statement contain these high quality information, the high quality informations that is transparent for the user and comparable over the period presented, and that informations provide a suitable starting points for the accounting in the accordance with IND AS, and that information can be generated at a cost that does not exceed the benefits. This is the objective of IND AS 101. Now, next point is scope. What is the scope of IND AS 101? Or what is the applicability and the non-applicability of IND AS 101? An entity shall apply this IND AS. An entity shall apply this IND AS. Number one, its first IND AS financial statement, and number two, when each interim financial report, if any, that it present in the accordance with IND AS 34 interim financial reporting for the part of period which is covered by its first IND AS financial statement. is that the provision of IND AS will be applicable for the entity in the case when there is any entity which is preparing its first IND AS financial statement, and it is also applicable by the company in the case when there is any company which is preparing interim financial report, if any, that is present in the accordance with IND AS 34 for the part of the period which is covered by the first IND AS financial statement. Is that the IND AS 101 is applicable in the case when there is an entity which is preparing first IND AS financial statement and preparing for the interim report. The interim report which will be considered the part of its first IND AS financial statements. Number two, and entities first IND AS financial statement are the first annual financial statement in which the entity adopts IND AS in accordance with the IND AS which are notified under the Companies Act 2013 and makes an explicit and unreserved statement in those financial statements to comply with the IND AS. Is that when there is any entity which is using first time IND AS and which is preparing its first IND AS financial statement, in then the organization shall adopt all the applicable IND AS in the accordance with the IND AS which are notified by the Companies Act 2013, and in the respect of this the entity will make an explicit and unreserved statement in the respect of compliances of IND AS in its financial statements. Is that the entity when there is any entity which applying the IND AS first time, then the entity shall apply all the applicable IND AS which are notified under the Companies Act 2013, and the company will also provide a statement in its financial statement in the respect of compliances with IND AS. This IND AS does not apply to changes in accounting policy which is made by the entity that already applied IND AS. Is that this standard shall not be applicable in the case when there is any organization which apply to change in accounting policy. Is that when there is any changes in the accounting policy which is adopted by the entity, then the provision of IND AS 101 shall not be applicable, because in the respect of changes in accounting policy, there is already a applicable IND AS. Such as changes are the subject of number one, requirement on changes in accounting policy in IND AS 8, accounting policy, changes in accounting estimation and the errors. Is that if there is any change in accounting policy, then it is covered by IND AS 8, accounting policy, change in accounting estimation and the error. And such changes are the subject to the specific transitional requirement in other IND AS. Is that this standard shall not be applicable in the case when there is any changes in accounting policy which is made by any entity. Such changes are subject to the requirement on change in accounting policy in accordance with IND AS 8, and such changes are subject to the specific traditional requirement in other IND AS. recognition and the measurement. Now we are discussing the topic of recognition and measurement as per the IND AS 101. Recognition and the measurement. Point 1 is opening IND AS balance sheet. What will be the recognition and the measurement as per IND AS 101 in the respect of opening IND AS balance sheet? An entity shall prepare and present an opening IND AS balance sheet at the date of transition of IND AS. Is that as per the IND AS 101, an entity shall prepare and present an opening IND AS balance sheet, which is prepared by the entity at the time of transition of the IND AS. This is the starting point for the accounting in the accordance with IND AS, subject to the requirement of this IND AS. Is that as per the IND AS 101, the entity will prepare and present a first or opening IND AS balance sheet, which will be prepared by the entity at the time of transition of the IND AS or at the time of adoption of IND AS. This is considered as the starting point for the accounting, which is made in the accordance with IND AS 101. Number 2, accounting policy. What will be the recognition and the measurement of accounting policies? An entity shall use the same accounting policy in its opening IND AS balance sheet and throughout all the periods which are presented in its first IND AS financial statement. Is that as per the IND AS 101, an entity shall use the same accounting policy in its opening balance sheet. When there is any entity which is preparing its first opening IND AS balance sheet, then the entity will follow the same accounting policies at the time of presenting its opening IND AS balance sheet and throughout all the periods which are presented in its first IND AS financial statement. Is that the entity will not change the accounting policies for its first opening balance sheet, first opening IND AS balance sheet. Those accounting policies shall comply with each IND AS effective at the end of its first IND AS. Is that these accounting policy shall be complied by the entity with each IND AS effective at the end of the first IND AS. An entity shall not apply difference. The entity shall not apply different variants of IND AS that were effective at earlier date. Is that the entity will not apply any other or any different variants of the IND AS that were effective at earlier date, and the entity may apply a new IND AS that is not yet mandatory if that IND AS permit early application. Instead, if there is any entity which is want to apply a IND AS, then it may apply. But if that IND AS permit early applications, an entity shall in its opening IND AS balance sheet, the entity shall in its opening IND AS balance sheet, number 1, recognize all the assets and all the liabilities whose recognition is required by IND AS. Is that in its opening IND AS balance sheet, the entity shall, number 1, recognize all the assets and all the liabilities
whose recognition is required by IND AS. Number 2, the entity shall not recognize terms as assets and liabilities if IND AS does not permit such a recognition. Is that if it is permitted by the IND AS, then the entity will recognize the assets and liabilities. If it is not permitted by the IND AS, then the recognition as assets and liabilities shall not be made, and the entity shall, in its opening IND AS balance sheet, reclassify the items that is that it recognized in the accordance with previous GAAP as one type of assets as and one type of liabilities and or the component of equity, but are a different type of assets, liabilities and component of equity in the accordance with IND AS. Is that in its first or opening IND AS balance sheet, the entity shall reclassify the items. The entity shall reclassify all the items in the accordance with its previous GAAP as one type of assets, one type of liabilities, or the component of equity. But are the different type of asset or different type of liability or the component of equity in accordance with IND AS. And the entity shall also apply IND AS in measuring all recognized assets and all recognized liabilities. Is that as according to this, an entity shall in its opening IND AS balance sheet recognize all the assets and all the liabilities whose recognition is required by IND AS. And number 2, the entity shall not recognize all the items, shall not recognize items as assets and liabilities if it is not permitted by IND AS. Number 3, it is reclassify the item that is recognized in the accordance with previous GAAP or but are the different type according to the IND AS. And the entity shall also apply IND AS in measuring all the recognized assets and all the recognized liabilities. The accounting policy that an entity uses in its in opening IND AS balance sheet may differ from those that it used for the same date using a previous GAAP. When there is any entity which is applying any accounting policy, then the entity used in the opening IND AS balance sheet may be differ from the from that are used by such organization for the same date using in its previous GAAP. The resulting adjustment which is arising from the event and the transaction before the date of transition of the IND AS. Therefore, the entity shall recognize those adjustments directly to the retained earning at the date of transition. Is that in the case when there is any adjustment, there is any resulting adjustment which is arise from the events or from the transaction before the date of transition of the IND AS, then the entity shall recognize such adjustment directly in retained earning at the date of transition. In the previous slides, we have discussed the recognition and the measurement as per IND AS 101. Now we will discuss the estimation as per IND AS 109. What will be the estimations as per IND AS 101? Estimation. An entity's estimation in the accordance with IND AS at the date of transition of the IND AS shall be consist with estimate made for the same date in the accordance with previous GAAP. is that as per the IND AS 101 and estimations which are made by the entity in the accordance with IND AS at the date of transition shall be constant with the estimation which is made for the same date in the accordance with previous gap, unless there is objective evidence that those estimations were in error. Is that according to the India's one and entities estimation which are made in the accordance with India's at a time of transition. At a time of transition to India, then such estimation should be constant for the same date in the accordance with previous gap, unless there is the objective evidence that those estimates were in error. In the case of estimation, an entity may in the case of the estimation, the entity may receive the information after the date of transition to the NDS about the estimation that it had made under the previous gaps. In the case of estimation, the entity will obtain the all the relevant informations after the date of transitions after the date of transition to Indias about the estimations which are made under the previous gaps. In the accordance with the paragraph, the entity shall treat the receipt of the information in the same way as non-adjusting event after the reporting period in the accordance with India's state. Event after the reporting period is that when there is any information which is received by the entity, then such information shall be treated by the entity in the same way as a non-adjusting events, and it will be considered as a non-adjustive event in the accordance with India's stand. For the example, assume that an entity's date of transition to India's is 1st April 2015 and the new information on 15th July 2015 requires the revision of an estimation which is made in the accordance with previous gap at 31st March 2015. Then the entity shall not reflect that new information in its opening India's balance sheet. Instead, the entity shall not reflect such new information which is received on 15th July as such not reflect these new information in its opening balance sheet. Instead, the entity shall reflect the new information in the profit and loss account for the year ended 31st March 2016. Instead, when there is any entity which is received any information after the reporting period, then the entity shall not reflect that new information in its reporting or in its opening India's balance sheet. Instead, the entity shall reflect these new information in the statement of profit and loss account or in other comprehensive income for the year which is ended 31st March 2016. It is in the next year. An entity may need to make the estimate. An entity may need to make the estimations in the accordance with the IND AS at the date of transition to the IND AS that were not required at that date under the previous gaps. Is that the entity need to make the estimation, and such estimation shall be made in the accordance with the applicable IND AS at the date of transition to the IND AS that were not required at that date under the previous gap. Is that if there is any estimations which is not required as per the previous gap, then the entity may need to make the estimation in the accordance with such applicable IND AS. To achieve the consistency with IND AS 10, those estimates in the accordance with IND AS shall reflect the conditions that existed at the date of transition to the IND AS. Is that when there is an entity which is want to achieve the consistency with IND AS 10, then these estimation in accordance with IND AS shall reflect the conditions that existed at the date of transition. In particular, the estimations at the date of transition of IND AS of the market price, the estimation which are made, which are related to the market price, related of market price, interest rate, and the foreign exchange rates shall be reflected market condition at that date. Is that if there is any estimation which are made at the date of transitions to the IND AS of market price, interest rate, or the foreign exchange rate, then it shall be reflect that it shall reflect market condition at that date. On the basis of our paragraph, if we apply these paragraphs to opening IND AS balance sheet, they also apply all these ever paragraph should be applied to opening IND AS balance sheet, and these paragraphs should also be applied to the comparative period which is presented in the entity's first IND AS financial statement, in which case the reference to the date of the transition of the IND AS are replaced by the reference to the end of comparative period. Is that all the recognition, measurement, and all the estimated paragraph are to be used by the organization for the preparation of opening IND AS balance sheet, and these paragraphs shall also be applied to the comparative period which is presented in entity's first IND AS financial statement. Presentation and the disclosure. What are the presentation and the disclosure requirement as per the IND AS 101? Is that what are the disclosure and how we will present the informations as per the IND AS 101. This IND AS does not provide exceptions from the presentation and the disclosure requirement in other IND AS. Is that this statement or this standard does not provide any exemptions from the presentation and the disclosure requirement which are given or which are required by or which are required in other IND AS. Is that if there is any IND AS which is required any disclosure of in the respect of any information, then this standard does not provide any exemptions. Comparative information. How to disclose the comparative information? Disclosure in the respect of comparative information. An entity's first IND AS financial statement shall include an entity's first IND AS financial statement shall be include at least 3 balance sheets, 2 statement of profit and loss account, 2 statement of cash flows, and 2 statements of change in equity and the related notes, and it is also include comparative information for all statement presented. Is that in the respect of comparative information as per the IND AS 101, the entity's First, India's financial statement shall be contains at least three balance sheets, two statement of profit and loss account, two statements of cash flow, and two statements of change in equity and related note. And this first India's financial statement should also include comparative information for all the statements which are presented. Non-IND AS comparative information and historical summaries. What will be the presentation and the disclosure requirement in the respect of non-IND AS comparative information and historical summary? Some entities present historical summary of the selected data for the period before the first period for which they present full comparative information in the accordance with IND AS. Is that there are some organizations which present the historical summaries, and such historical summary are to be prepared by the entity for the selected data and for the selected period. The selected period is which is before the first period for which they are presenting full comparative information according to the applicable IND AS. This IND AS does not require such summary to comply with the recognition and the measurement requirement of IND AS. Instead, as per the IND AS 101, there is no any requirement in the respect of any summary to comply the recognition and the measurement of IND AS. Furthermore, some entities present a comparative information which is made in the accordance with previous gap as well as the comparative information which is required by IND AS 1. Then, in this case, in any financial statement which is containing the historical summary or comparative information in the accordance with previous gap, in case if there is any financial statement which is contains any historical summary or comparative information in the accordance with previous gap, then the entity shall: number 1, label the previous gap information. Label the previous gap information prominently as not being presented in the accordance with IND AS. Label the previous gap information prominently as not being presented in the accordance with IND AS and disclose the nature of the all the main adjustment that would make and comply with the IND AS. And in the respect of this, the entity shall disclose the nature of the all the main adjustment which are required to comply the IND AS, and an entity need not qualify those adjustments. Explanation of transition of IND AS. An entity shall explain how the transition from the previous gap to IND AS affected its reported balance sheet, financial information, financial performance, and the cash flow. Is that the entity will also disclose an explanation in the respect of transition of IND AS, and in such explanation, the entity shall explain how the transition which is made from previous gap to IND AS affected its reported balance sheet, financial performance, and cash flows. The disclosure in the respect of such explanation shall be made by the entities. Reconciliation. As per IND AS 101, the entity shall disclose the following reconciliations. Number 1. These reconciliation shall include is that the financial statement of the entity shall be include the following reconciliation. Number 1, reconciliation of its equity which is reported in the accordance with previous gap to its equity in the accordance with Ind AS for the both following dates is that the financial statement of the entity shall be disclosed a reconciliation, and such reconciliation shall be made in the respect of equity which is reported in the accordance with previous gap and its equity in the accordance with Ind AS for both the following date. Number one, the date of transition and the end of the latest period, which is presented in the entity's recent most recent annual financial statement in the accordance with Ind AS, in the accordance with the previous gap, is that the reconciliation in the respect of the equity shall be prepared by the entity in the accordance with Ind AS for the it is prepared in the accordance with gap as well as in the accordance with Ind AS for the following dates. Number one, the date of transition and the date of latest period which is presented in the entity's most recent annual financial statement which are made as per the or in the accordance with previous gap. As per Ind AS 101, the financial statement shall also include a reconciliation to its total comprehensive income, which shall be made in the accordance with Ind AS for the latest period in the entity's most recent annual financial statement. The starting point for that reconciliation shall be the starting point for the reconciliation shall be the total comprehensive income which is made in the accordance with previous gap for the same period. If an entity does not report such a total profit and loss and the under previous gap. And number three, if the entity recognized or reversed any of the impairment loss for the first time in presenting its opening Ind AS balance sheet, is that in the case when there is any entity which recognized or reversed any of the impairment loss for the first time in presenting its opening Ind AS balance sheet, the requirement the disclosure that the disclosure that Ind AS 36 impairment of assets would have required if an entity has recognized those impairment loss or impairment reversal in the period which is beginning with the date of transition of Ind AS. Is that if the entity had recognized those impairment losses or the reversal in the period which is beginning with the transition of Ind AS, then the disclosure shall be made as per Ind AS 36. The reconciliation which are required by paragraph A and paragraph B shall give sufficient detail to the users of the financial statement so that they can understand and they can obtain all the material information or all the material adjustment to the balance sheet and the statement of profit and loss account. If the entity presented a statement of cash flow under its previous gap, then it shall also explain all the material adjustment to the statement of cash flow. Is that if there is any entity which is presented or it is prepared a cash flow statement under a previous gap, then it shall also explain all the material adjustment in the material adjustment to the statement of cash flows. If there is any entity which becomes aware to the errors which is made under the previous gap, then the reconciliation which is required by paragraph A and B shall distinguish the correctness of those errors from the changes in accounting policy. Is that if there is an entity know about the errors which are made by the such entity under the previous gap. Then the reconciliation which are made by the entity according to the requirement of paragraph A and B. Then such reconciliation shall be distinguish the correctness of those errors from the changes in accounting policies. IND AS 8 does not apply to the changes in accounting policy and entity. IND AS 8 does not be applicable to the changes in accounting policies an entity makes when it adopts IND AS or to change in those policies until after its present its first time financial statement. Therefore, IND AS 8 requirement about changing accounting policy does not apply in an entity's first interest financial statement. Instead, in case when there is any changes in accounting policy during the first time adoption or entity's first interest financial statement, then the provision of IND AS it will not be applicable. If during the period which is covered by the first IND AS financial statement, an entity change its accounting policy or its use of the exception which is contained in this IND AS, it shall explain the changes which is made between its first time IND AS interim financial report and its first IND AS financial statement in the accordance with relevant paragraph. And it shall also update the reconciliation which is required by paragraph A and paragraph B. Instead, when during the period which is covered by first IND AS balance sheet or first IND AS financial statement, if there is any changes which is made by the entity in its accounting policies or it uses it use of exception, then the entity shall explain the changes which is made between its first IND AS interim financial report, its first IND AS interim financial report and its first IND AS financial report in the accordance with the relevant paragraph. And accordingly, the entity will update the reconciliation statement which are required by paragraph A and paragraph B. Designation of financial assets and financial liabilities. Now, we will discuss the designation of financial assets and financial liabilities. An entity is permitted to designate a previously recognized financial assets or financial liabilities financial assets as financial assets which is measured at fair value through the profit and loss account. Instead, as per the IND AS 101, an entity is permitted to designate a previously recognized financial statement as financial statement which is measured at the fair value through the profit and loss account. Then the entity shall disclose the fair value of such financial assets as designated at the date of designation and their classification and the carrying amount in the previous financial statement. Instead, when there is any designation of any financial assets, then the entity shall disclose the fair value of such assets which is designated at the date of designation and their classification and the carrying amount in the previous financial statements. An entity is also permitted to designate a previously recognized financial liabilities as a financial liabilities at the fair value through the profit and loss. And in the respect of this financial liabilities, the entity shall also disclose the fair value of the financial liabilities as designated at the date of designation and their classification and carrying amount in the previous financial statement. Is that as per IND AS 101, the entity is permitted to designate a previously recognized financial assets as well as financial liabilities at the fair value through the profit and loss. And in this respect, the entity will disclose the fair value of the financial asset and financial liabilities, which is designated at the date of designation, and the classification, the carrying amount of financial assets and financial liabilities is to be disclosed in the previous financial statements. Use of fair value as deemed cost. Now we are discuss the use of fair value as a deemed cost. If an entity use the fair value in its opening index, if there is any entity use financial value in its opening index financial statement as deemed cost for an item of property, plant and equipment and investment property and for the intangible assets, then the entity's first IND AS financial statement shall disclose for each line item in the opening IND AS balance sheet. Number one, the aggregate of those fair value and the aggregate adjustment to the carrying amount which is reported under previous GAAP. Is that when there is any entity which use the fair value in its opening IND AS balance sheet as deemed cost in the respect of property, plant and equipment and investment or any of the intangible assets. In such case, the entity's first IND AS balance sheet or first IND AS financial statement shall include or shall disclose number one, the aggregate of those the aggregate of the fair value and the aggregate adjustment to the carrying amount which is reported under previous GAAP. Use of deemed cost for the investment in subsidiary, joint venture and associate. Is that when there is a use of deemed cost, when there is the use of deemed cost for the investment which is made in subsidiary, joint venture and associate by the company, then what are the disclosure requirement as per the IND AS 101? Similarly, if there is any entity which uses a deemed cost in its opening IND AS balance sheet for an investment in subsidiaries, joint venture and associate in its separate financial statement, then the entity shall disclose in its separate financial statement. If there is any entity which is use a deemed cost in its opening IND AS balance sheet for the investment which is made in joint venture, associate and subsidiary in its separate financial statement, then the entity shall disclose in its first IND AS balance sheet, first IND AS separate financial statement. Number one, the aggregate amount of deemed cost of the investment for which deemed cost is their previous carrying amount. Number one, the aggregate deemed cost of those investment for which deemed cost is their previous GAAP carrying amount, and the entity will disclose the aggregate deemed cost of those investment for which deemed cost is fair value, and the entity shall also disclose the aggregate adjustment to the carrying amount which is reported under previous GAAP. Is that these all point 3 point are to be disclosed by the entity in the case when the entity use the deemed cost for the investment which is made in subsidiary, joint venture and associate. Use of deemed cost for oil and gas assets. In case when there is any entity which use the deemed cost for oil, gas assets, then what will be the disclosure requirement? If the entity use the exceptions for the oil gas assets, then it shall disclose the fact and the basis on which carrying amount which is determined under the previous gap was allocated. Is that if there is any entity which use the exception for the oil and gas assets, then the entity shall disclose the fact about such exception, and the entity will also disclose the basis on which the carrying amount are determined. The carrying amounts of such assets are determined under the previous gap were allocated. Use of deemed cost for the operations subject to rate regulation is that when there is any entity which is use the deemed cost for the operation subject to rate regulation, then what will be the disclosure requirement as per the IND AS 101? If there is any entity which use the exception for the operation subject to the rate requirement, then the entity shall disclose the fact and the basis on which carrying amount were determined under the previous cap. Use of deemed cost after severe hyperinflation. As per IND AS 101, what will be the disclosure requirement when there is any entity use the deemed cost after the severe hyperinflation? If there is any entity which elect to measure the assets and liabilities at the fair value and to use their fair value as a deemed cost in the opening IND AS balance sheet because of severe hyperinflation, then the entity's first IND AS financial statement shall disclose an exceptions of how and why the entity had and then ceased to have a functional currency that have both the following characteristics. Number one, it number one, a reliable general price index is not available to all the entities with the transaction and the balance in currency. And number two is exchangeability between the currency and the relatively stable foreign currency does not exist. Interim financial report. Now we will discuss the interim financial report disclosures in the respect of according to the IND AS 101. Interim financial report disclosure as per IND AS 101. If an entity present an interim financial report in the accordance with IND AS 34 for the part of the period which is covered by its first IND AS financial statement, then the entity shall satisfy the following requirement in addition to the IND AS 34 is that when there is any entity which present a interim financial report and such interim financial report is prepared in the accordance with IND AS 34 and it is considered a part of its first IND AS financial statement, then in this respect the entity shall satisfy the following requirement in addition to the requirement of IND AS 34. There are some additional requirements. Number one, each such interim financial report shall, if the entity presented at as interim financial report for the comparable interim period of the immediate preceding financial year, where each such financial report, interim financial report shall, if the entity presented an interim financial report for the comparative interim period of the immediate preceding financial year includes number one, a reconciliation of the equity which is made in the accordance with previous gap at the end of that comparable interim period to the entity under IND AS of at that date, and the reconciliation to the total comprehensive income which is made in the accordance with IND AS for the comparative interim period is that it shall include a reconciliation of its equity which is made according to the previous gap at the end of comparative interim period to that equity under the IND AS, and it is also include a reconciliation to its total comprehensive income in the accordance with IND AS for the comparative IND AS for the comparative interim period. The starting point for the reconciliation shall be total comprehensive income in the accordance with previous gap for that period, or if an entity did not report such a total profit and loss in the accordance with previous gap. B point is in addition to the those reconciliation in the addition to the reconciliation which is required by A. This one, reconciliation in equity or reconciliation of total comprehensive income, an entity's first interim financial report which is made in the accordance with IND AS 34 for the part of period which is covered by its first IND AS financial statement shall include the reconciliation which is described in above or a cross reference to the another published document that include those reconciliations. If an entity change its accounting policies or it use of the exceptions which is contained in this standard, then the entity shall explain the changes in each such interim financial report, and the entity shall also update the reconciliation which is required by A and B. Is that in case when there is any changes in the accounting policy or when the entity use the exceptions which is contained in IND AS, then the entity shall explain the changes in each of the interim financial report, and the entity shall also update the reconciliations which are required by A and B. IND AS 34 requires the minimum disclosure. IND AS 34 required the minimum disclosures which are based on the assumption that the user of the interim financial report also have access to the most recent annual financial statement. However, India 34 also require an entity disclose any event or the transaction that are the material to an understanding of the current interim period. Therefore, if a first time adoption did not in its most recent annual financial statement, which is made in the accordance with previous gap, then the disclosure information which are material to an understanding of the current interim period, its interim financial report should disclose all the information and include a cross reference to the another published document that includes it. This is our IND AS 101. In this IND AS, we have discussed about the objective of 101, scope of IND AS 101, and recognition and the measurement in the case when there is any first time adoption of IND AS, and presentation and the disclosure requirement as per the IND AS 101. Thank you so much for watching this video.